A lot of people ask me, how can I reduce my taxes? There are three major ways. One is to hold your assets long term before you sell them and take advantage of the reduced long term capital gains rates, which are generally 15 to 20%. The second way to do is to live in a state where they don't tax your income or capital gains. And there are approximately 9 states right now that don't tax your capital gains. There are states like California, which have a 13% tax on your capital gains on top of what the federal government is taking. So that is a choice you have to make. Now, one of the states, we don't even think about it as a state, but one of the options here is to go to Puerto Rico. Puerto Rico is considered a U.S. territory. It's not a state. And because it's not a state, it does not have representation in Congress. So, as a consideration for that, because they don't have representation on the tax laws that they have, the US government cut a deal with Puerto Rico in the forming of their tax laws, where Puerto Rico actually collects the taxes that they would then pay to the federal government. And they can do it under their own laws. Bottom line here is Puerto Rico is the tax haven for Americans. You've heard of islands in the Pacific and in the Indian Ocean, but for the US citizen, Puerto Rico is your tax haven. And here's the net. If you move there, the gains you experience while being a Puerto Rican resident, your capital gains, are subject to a taxation of 0%, no tax, and while you're a resident there. Lots of rules around it, lots of restrictions, but it's very significant. Puerto Rican Act 60 is the incentive program to get investors to bring their companies and their personal lives down to Puerto Rico to live and invest there. One of your compensations is that there's zero tax on your capital gains and some other significant benefits. How does the IRS look at this? Well, first of all, the US government knows this loophole is there and they're fully supportive of it because Puerto Rico has significant problems. I think the government declared bankruptcy like a couple of years ago, really bad. They just desperately want people to come there and spend money in Puerto Rico. And that is their motivation. The US government knows that. They're not really able to give them the same sort of unemployment benefits instead of that we give to other states. But this is basically a loophole the US government's permitted. But you need to be careful. There are two sets of laws that you have to comply with. You have to comply with US tax laws and Puerto Rican tax laws, and they conflict. So you have to be very careful about this. Now, in Puerto Rico, ultimately, they don't care how much capital gains you report because it's taxed at 0%. But you should care how much capital gains reported because those are the capital gains that would be specifically excluded by the US government if you're later audited. So you really want to be detailed in saying these are all the gains that I'm not having to pay tax on because I'm in Puerto Rico. Now, the US government really has no say over that. What they can do is see if you are actually complying with the US tax laws when you're in Puerto Rico. What are these rules that you have to comply with? There's 5 rules you have to maintain. Let me read them to you. And you have to comply with at least one of these during the year. The first one is that you have to be there at least 183 days of a year in Puerto Rico. Now remember, you have to comply with just one of these rules. If you comply with that one, everything else falls into place. The second rule is the variation on that. You have to be there at least 549 days over a 3-year period. So I say if you comply with the first one, that one's taken care of. The third rule, and this is actually one people make mistakes with, is that you were present in the United States no more than 90 days during the tax year. The fourth one is that if during the tax year that you earned income had to be earned while you were in Puerto Rico. So Puerto Rico is not a vacation destination, it's a work destination. And the last one is that you had no other significant connection to the United States. And I've known people to make major mistakes there with the significant connection to the United States. I've known people who have gone back, gotten homes in the US, gotten cars in the US, spending 6 or 8 months of the year in the US. That's very important if you want to take advantage of a big run up to very high numbers that might happen with Bitcoin, Ethereum, some other ones. You want to move there before the run up happens. It does no good to move there at the top because the gain up to that time has already been subject to US taxation. So what happens is if you have a coin, say you bought it last year, and then at the end of the year, you move to Puerto Rico, and that whole next year you're in Puerto Rico, and then you sell this asset, The portion of the gain that occurred while you were in Puerto Rico is subject to 0%. The value of the gain from when you bought it up to its fair market value on the day you entered Puerto Rico, that is still subject to U.S. taxation. So it's kind of split, if you will. It can be very crazy. If you're considering doing this, I suggest it not be something you do unless you have at least $2 million of investment assets that you want to set aside. It does involve living in Puerto Rico for typically 3 to 4 years. If you're not a resident in Puerto Rico on January 1st of that year, then that's considered a short year. All right, so it's a partial year that you're in Puerto Rico. In that case, you have to remain living in Puerto Rico for 3 full years afterwards. And otherwise, the IRS can reverse any tax credits you claimed in the short year. So that's a big one if you're claiming things in the short year. So if you're going to move there, don't try to sell much in that short year. Try to hold off to January 1st the next year because you won't have to be subject to that law. The other thing is you have to maintain residency in Puerto Rico. That doesn't mean you have to be there 365 days of the year. We all have lives. We want to travel. You probably have reasons to go back to the U.S. You need to do certain things. You have to comply with the closer connection test the first year and continue that. Now, the closer connection test is 3 pages of questions. And ultimately, they ask what's true about you in Puerto Rico or U.S. For example, do you have a home that you can go to anytime? And if the answer is yes for U.S., then you don't have a closer connection to Puerto Rico and you'll be denied. So you have to say, no, I don't. You have to give up your home. That means you have to have a home that you don't live in 365 days of the year. Secondly, you don't want to have a car in your name in the U.S. because that would suggest that you're going back. All right. You can give your car to a friend and borrow that car anytime you're back in the U.S., perhaps, but do not have the car in your name. These are the 2 biggest ones. Another one would be retaining your primary personal records, like your birth certificates, your diplomas, any sort of important documents. You want to take those with you to Puerto Rico because that's what someone does when they're actually living outside of the U.S. What the IRS does for people who take advantage of the Puerto Rico Act 60 tax incentive is they watch your passport. And they have one of their compliance programs, and they watch to see how many days you're spending in the country. And if you're starting to violate the 90-day rule or not meeting 183-day rule, you may still be an accurate resident, but they want to push into that, and they can audit you on that. And I've heard of people being audited, and they're very interested because the people are high income, high roller people, and they're very interested in them making sure they don't evade taxes. Don't get bad advice like the head of Pantera Capital, Daniel Moorhead, who got bad advice from U.S. lawyers and made mistakes and did not comply with his residency obligations and is now under investigation by the U.S. Senate and probably by the IRS soon, criminal investigation for not paying taxes on $100 million of gain. Don't let that be you. So please, if you're moving there, give our offices a call. We'll talk to you, give you advice on how to connect up with Puerto Rican experts that can help you along the way. Take care and have a great day. Please like, subscribe, and follow.